Hello, and welcome to the webinar series for the California Restaurant Mutual Benefit Corp. My name is Kaya Stanley, and I am the chair of the board and the CEO for CRMBC. And I'm joined here today with Ruben Medina, who is the former president of Cumbre Insurance and also the current principal of Acrisure Southwest. Welcome, Ruben.
Oh, thank you, Kaya. Thank you for having me. I appreciate it.
So, Ruben, you have been a strong supporter for CRMBC since the beginning, since 2004. And you have, even with all the ups and downs that CRMBC has had, you have seen CRMBC as the best alternative for your members through all these years. And especially as we were talking about before we started the webinar, with certain things that are happening within the market right now. And so I wanted to get on this webinar so we can start talking about what's going on in the market and why you think that CRMBC is going to be the best option out there.
Yeah. So technically 2005 is when I came on. I placed my very first client, McDonald's franchisee, a large McDonald's franchisee, somebody that I really care about, good close friend of my family, actually. They needed some help, and the CRMBC really bailed them out. At the time, if you recall, the market was really hard back then. There were only a few options, maybe state compensation insurance fund, maybe another carrier. Things were really slim back then. The market was really tough. And I was looking for an option, and CRMBC was, I was made aware of the CRMBC, and I said, this is perfect for you. I mean, you're doing all the right things. You want to improve upon your claims handling. This might be a great option for you. And we were blessed to be placed with them, and we've been with them ever since. So since 2005. And the market, yeah, to your point, the market is tough, and I still feel like it's the best option for this particular client and others.
And it's a timely conversation because just before we got on the call, you were talking about things that are happening in the market on other types of insurance that we're seeing are going to happen with workers' comp coming up here soon. So, so for our audience, why don't you tell us a little bit more about what you were just talking about?
Sure, no problem. You know, it's no secret that the market is hardening, especially the property market. Specifically, reinsurance is also tightening up, especially here in California, right? So companies like Farmers have pulled out of California, leaving a lot of their agents high and dry. Allstate, there's some rumblings about them possibly pulling out as well. And it's just a matter of time before the workers' comp market starts to harden too. And, you know, being with Acrisure and having these resources, I've been put in a position where I've been trying to help these agencies place business because things are just tightening up so fast. So it's tough. I see the writing on the wall, and I think being able to control your own destiny and something like a self-insured group like the CRMBC, a successful one such as the CRMBC, I think is a viable option.
And when we're talking about, for people on the webinar that aren't familiar with what we're talking about with it being a better option, we're referring to the specific details of a traditional insurance company versus a self-insured group. So when a market hardens, the traditional companies don't fare as well. And in fact, what we saw in the past is some of the traditional insurance companies actually leave the market altogether. And then your clients are left with some really tough choices that at that point, they want to get into CRMBC, but because we're such a selective group and we only take members who are really understand what a self-insured group is and understand how to control their claims, sometimes they're really left in a bad situation.
Correct. And that was the case with my client. Again, we were fortunate to be placed in the CRMBC, and they've been a loyal member ever since 2005.
And so I want to talk a little bit again, high level again, about what a self-insured group is, because there's some people on the call and even a lot of people that apply to be part of CRMBC that don't understand the difference between traditional insurance and what a self-insured group is. And obviously you've been with CRMBC for a long time, and you are much more even educated about insurance than I am. But the way that I look at traditional insurance versus a self-insured group is the traditional insurance company is sort of like the casino. The house always wins. They're always going to profit, even if you have some good outcomes here and there. It's designed that their shareholder is who they're looking out for. And a self-insured group is when a bunch of different business owners in a common industry come together and they decide to self-insure their own risk. And that's what we're talking about when we say we're very selective about who we will allow into the group. Do you want to talk a little bit about the philosophy of self-insured groups and why this appeals to you and your clients?
Yeah, I mean, just to kind of further talk about what, the difference between the two, right? So oftentimes I'll speak a different language. I'll speak insurance, right? So we refer to traditional insurance, as you put it, as first dollar coverage, right? So what we're doing is we're transferring risk. So we buy a traditional insurance policy from a standard insurance company. We call them first dollar because they become, in exchange for premium, that carrier becomes responsible for the first dollar of any claim forever, right? So there's a price to be paid for transferring that risk. But to your point, it's kind of a crapshoot, right? Because you're going into a pool of insurance that you don't know what, you're in there with a dynamite manufacturer, for example, when you're trying to run a restaurant, right? So how those claims kind of develop and the things that happen and how they manage those claims ultimately dictate what you're going to pay or whether or not that insurance company is profitable. And if they're not, oftentimes they'll just leave the state of California like we're seeing today. Whereas in self-insurance or in a self-insured group, that's homogenous in nature. So you're all kind of doing the same thing. You understand the risk involved. And if you're selective and you kind of pick the right members, which you have historically done, then you stand a very good chance to become very profitable. So rather than trusting an insurance company that might insure a lot of different things, you're kind of pulling your money together and doing something that you know very well. You kind of know your neighbors, you collaborate, you kind of create ways to maintain profitability, and if successful, then you share in that profit as opposed to just being successful with the standard insurance company and leaving those profits with the insurance company, right? You really don't benefit at the end of the day. The other biggest difference is when you're in a standard insurance company here in California, you're kind of governed by the Workers' Comp Insurance Rating Bureau. And, personally, I've been doing this for 32 years. I'm a workers' comp specialist. I don't have a lot of faith in the WCIRB or the way that experience modifications work. Most people who see this are probably very familiar with what an experience modification is in California. And oftentimes, especially here in California, you're paying today. There goes my dog. Goes the mailman.
We'll edit. We can edit that.
Yeah. Let him calm down a little bit. I don't know. Can you hear him?
Nope, not anymore.
Okay. If so, many people on this call are going to be very familiar with experience modifications and how they work. And I really take issue with the way that they work because you're paying today, oftentimes an inflated rate for something that may have happened 3 years ago.
Right.
So it's 4 years back, not counting the most recent year. And oftentimes you could completely change a company's culture. You could go from having a lot of claims to no claims, but you're still going to be paying for those past sins. And I think it's an unfair system. So in a self-insured group, you're no longer governed by the Workers' Comp Insurance Rating Bureau, and you're basically truly underwritten based on your performance and the group's, right? But you really kind of have much more control over what you ultimately pay for insurance over a long period of time. So I think in a hardening market, especially, if you're fortunate to be selected as a member of the CRMBC, I think it's a very viable option.
And to your point, we just had actually a new member come in under those circumstances where they had an experience modification that when our underwriting team took a look at it, we really were able to isolate what was causing it. And so where in the traditional market, they were getting a certain quote because they don't dive in and they don't get access to the CEO and the board and the underwriting team. And we were able to dive in and look at what caused it and look at an action plan for how we could avoid it. And we didn't have to write our quote at the same rate that the commercial carrier wrote it because we weren't governed by the XMod. So to your point, there's real time something that just happened within the last week where we were able to help a very good operator avoid just a huge hike in price.
An unfair penalty, really. Often. Yep. I have plenty of examples. There are some first dollar carriers who do a better job than others, but you make an excellent point. None of them are going to have the type of communication or the level of influence that the CRMBC would have. In the example you just gave, I mean, the fact that you're aware of it. How many CEOs of insurance companies are even aware of a member within their policy family who's having a problem like that? They're not even aware of something.
Yeah, and that's one of the things that is really cool about CRMBC is it's owned by restaurant. It was formed by restaurant owners, it's owned by restaurant owners, it's governed by restaurant owners.
Mhm.
And that does make a huge difference because in addition to just what we're doing for the workers' comp coverage, it does become kind of an area where we're sharing best practices.
Right.
We are, we're looking at claims in a different way because like you said, the homogeneity of the group, we're all in it together, we're all facing the same issues, and we can look at trends and we can deal with trends and we can address things in a different way than, for example, if you're in an insurance company with a mining company or something else where everyone's doing the same thing.
Right. Yeah.
Yeah.
The example of I have a number of clients who have been with the CRMBC since day one and they've remained there, right? Even through the assessments and all that good stuff. But the example I gave earlier is my longtime client, close personal friend. We did an analysis and I kind of broke down what their average rate has been over the last, 20 years almost, right? And just kind of determined that compared to other clients like theirs in the open market, they've paid much less money over time, taking into account, because they even went so far as to estimate what their experience modifications would have been if they had left. We have the capability of doing that in-house. And over time, they've saved a tremendous amount of money. And in the moment, I could understand, right? Assessments, that's bad news. Nobody wants to hear that. I was at all those meetings.
That's where we met.
I think that's where we met the first time. And even during then, I was like, guys, I've been doing this a long time. Stick with the program. This is the way to go, right? And not everybody listened to me. And a lot of those clients that chose not to listen to me are now paying the price for that, right? So I'm all about consistency. Okay, I like having routines. I like a methodology to things. It's just the way that I was raised. Maybe being an athlete, I had a program. I'm results driven, and I just know that consistency will always win out, right? So I feel like, especially as we touched on earlier, the market changing so dramatically now. This is an example. I think it's only going to enhance, the point in that consistency will win out. And I feel like if you're underwriting properly, and that's the other thing too. In the standard market, nobody really underwrites anymore. They kind of. Here's your application. I'm a broker, right? So I submit an application to a standard insurance company. I'm looking for the best possible quote for my client. And if it doesn't fit in their little box, right, it's a no, right? Or if it does fit, here it is. Here's the surcharges. Here's the fees. Here's everything on top of that, right? Whereas with the CRMBC, because it's so niche, right? Everybody's kind of on the same page. They want to underwrite property, but they're going to truly underwrite. Look at the risk. Look at what they're doing. Maybe they've made improvements. Maybe they've implemented some loss prevention measures that are really working now. And you're going to take an honest look at it. Whereas I think the standard insurance company doesn't do that nowadays.
Yeah, yeah. And to your point, it's pretty well established that that self-insurance has outperformed traditional insurance consistently over the last 110 years, despite markets going up and down. Self-insurance stays pretty stable, and we've seen it in recent years, and we're going to see it again now. Given the history, and I agree with you, the calculations that you're talking about, we've got several board members and members that also stayed in the group during the assessment and doing the calculation of what they would have paid if they had left and gone to the other market compared to staying in and paying the assessment. They fared better by staying in self-insurance. And that's a testament to self-insurance and how much you are able to control your destiny because you have so much control over your claims in a self-insured group. So before we close, I'd like to ask you, if we have brokers out there that have never sold self-insurance or who are wary about CRMBC because of the history in 2011 and 2012, what would your advice be to these brokers?
I think my advice would be to do your homework, talk to current members if possible, or brokers like myself who have experience. And if they've been in the game long enough, they know, and they just know, right, where the future is headed. And if your client has the ability to control their own destiny and be with people with like mind, like industry, and want to be a part of something, then they need to take an honest look at self-insurance, the CRMBC specifically. And if you're not comfortable communicating the pros and cons, right? There aren't many cons these days because I think a lot of that's been corrected, so it's mostly pros. But if you're not comfortable in talking about those, then reach out to somebody like me and I'm happy to help. But
Awesome.
but educate yourself, right? I mean, it's a viable, real option that's available to your client if they cut the mustard and they pass underwriting, of course.
That's right. That's right. Well, Ruben, thank you. And as far as educating yourselves, this is one of the beginning of a series that we are committed to doing, to dive down into all of the different topics related to self-insurance, related to workers' comp, because we know it's a complicated area that not a lot of people are familiar with. We're going to be providing resources for the operators, for resources for the members. And Ruben, thank you so much for joining us today. And I look forward to our next webinar coming up soon.
You're welcome. Thank you very much for having me.
Thanks.